we expect out of our property markets for the rest of 2019 and beyond? That's the question I ask of property researcher John Lindeman today. I'm in my mindset moment going to tell you one of the big differences between winners and losers, and it's probably not what you think. And then I'm going to have a chat with Adam Nobel, a top selling agent in Brisbane, about how to choose an agent to sell your property. Now, even if you're not planning to sell your property, understanding the psychology of selling agents is going to help you whether you're a home buyer or a property investor. So welcome to this week's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator, who has once again been voted our leading expert in wealth creation. That's the fifth time he's won a similar award in the last 7 years.
If you're like many others interested in real estate, whether you're an investor or a home buyer, you're wanting to get the best deal. And I know many people are wondering, is this the right time to get involved in property now? Because there's all the negative media. I saw the same questions though being asked a few years ago during the boom, when investors were similarly having doubts, wondering, was it the right time? Wondering, was it too late to get in the cycle? Of course, today many are wondering, are prices going to fall further? Should I sit by the sidelines? There's so much confusing and conflicting property forecasting information out there at the moment that hopefully after today's show, you can have a little bit more clarity on what's ahead as I check in with John Lindeman, property researcher, who's going to give us a simple equation pointing to the fact that increasing demand due to population growth at a time of decreasing supply of property, because we're now starting to build less properties, is going to lead to a rental crisis in Melbourne, Sydney and Brisbane. But we're going to discuss much, much more than that in the interview. So as I said, at the end of today's show, you're going to have more clarity. In my mindset moment this week, I'm going to teach you how to become a winner and do things very differently to losers. And I'm also going to have a chat with Adam Nobel and pick the brains of a top-selling Brisbane real estate agent. If you're planning to sell your home, this is going to give you some powerful information as it's probably going to save you quite a bit of money as well. If you're looking to buy a home or an investment property, it's going to put you in a much better position understanding what's going on in the head of a selling agent, the person you're going to be up against. So let's get on with the first part of the show as I have a chat with John Lindeman. There are a lot of scary headlines around at the moment. Now, here are two I recently read. One said in the news, Australia in 2019, 2020 is going to have a recession likely, and interest rates are going to hit to zero. And another one I read a couple of days ago said house prices could fall more than 30% as the country plunges into a deep recession. Now, with the biggest fall in house prices for a decade, some commentators are worried. They're worried that the current crisis of consumer confidence will impact on economic growth. So to get a better understanding of what's ahead for our property markets, I'm looking forward to my chat with John Lindeman of Lindeman Reports. Welcome, John.
Good morning, everyone, and thanks for having me, Michael.
Now, for those of you who don't know John, he's got well over a decade of experience researching the nature and dynamics of various types of asset classes, and he's worked at major data analysts, and over the years he's been recognised as one of Australia's leading property market researchers, authors and commentators. Now, I know I love reading his commentary on Your Investment Property magazine and his regular blog on Property Update, but most importantly, I actually respect the fact that he's got no properties for sale, no vested interest, and he tells it like it is. Now, you got something to live up to today, John, after that sort of introduction.
Happy to do that, yeah.
So, John, currently there are so many so-called experts predicting a long and a further lasting set of price falls for properties, 25%, 30% more, even further than we've got now. But reading your commentary in Lindeman Reports, and I'm suggesting everyone does subscribe to Lindeman Reports, I see that you don't agree. Why is that?
Well, I've studied the performance of the housing market going right back to 1901 when we first started as a nation. I've looked at all the main dynamics, the indicators that have caused booms and busts to occur. And what we're experiencing right now is nothing like the times when we've had these economic crises. And in fact, when you look at the headlines, I always say to people, if you read the papers, don't take any notice of what they're saying, because if you look back to what happened after the GFC, the headlines were all predicting a crash in the market. It didn't happen. And I think the same thing, they're out to sell papers, not to encourage you to invest in property.
Well, most commentators make their predictions based on past performance because they believe the market's going to continue to perform like it did in the past. But John, I read that you've got a different view. What's your analysis and what do you base your forecasts on then?
Well, I think that past performance can tell us a lot because it shows you how the market works and what the main indicators are. But once you understand what they are, you can then use those to predict what's likely to happen. And the three main indicators that I look at are population growth and change. And I see that, we're one of the fastest growing economies in the world. We're one of the fastest growing nations in terms of population growth. We've got very low unemployment. So all those indicators are pointing towards growth rather than decline in terms of the property market. And the other thing is it's where people want to live. As we get more and more people coming here from overseas, they all want to live in the capital cities, especially the big ones. And so the demand in capital cities always seems to exceed the supply. And that's why we've had, continual house price growth. It's not always regular. It does go down occasionally. And I think we're experiencing one of those episodes now. But over time, you'll see that prices will keep going up.
So population growth creates demand. Also, the people actually have to be able to afford to be able to live in these areas. So the ongoing wealth of our nation and our economy is doing pretty well, as you said, maybe not as well as the RBA would like, but unemployment is dropping, jobs are being created. So people have got the ability to afford properties. But in the future, I can see that wages growth hasn't been that strong and it's going to vary in the future. Some areas are going to do better than others just because people are going to have more disposable income, John.
That's right. And eventually incomes catch up and then you get another boom. We've had this in Sydney is one of the most typical examples, where you get a few years of boom and then no growth at all. And then once wages catch up and interest rates fall, you get another boom. But in the intervening periods, prices don't really fall that much, if at all. And over say 10 years, on average, prices tend to double.
Well, that's going back a long way. And I know you've got the information going right back. I've seen some of your charts going back to Federation, which is interesting because you're taking a long-term perspective. Now, I'm not very good at maths, but in a recent blog that was published in your Investment Property magazine and then again on Property Update, you made property forecasting look really easy because you said it boils down to a simple equation. Could you please work through that with us, John?
I tried to make it easy because a lot of people get very confused by the maths of property investing and how the market works. And so I just simply looked at the main indicators, which is one, demand. Now, according to the ABS, we're getting over 300,000 new residents from overseas arriving in Sydney, Melbourne and Brisbane each year. Now, that's a huge number of people. It would fill three, huge football stadiums. And that's each year, yes. But at the same time, because of the Royal Commission, the banks cutting back on housing finance and also the APRA regulations, it's meant that housing finance has fallen by 15% over the last year and new dwelling approvals have plunged by 30% in the last year. So what we're seeing is demand for housing going up, but the supply is rapidly diminishing. And what that leads to is a crisis, and the crisis will be in terms of rent. And let me explain this, Michael, that at the moment, the rental yield in Sydney and Melbourne is about 3%. That's the return you get, a gross return on a property. And that's just not enough for investors. You need at least 5%. It's still, you might be negatively geared, but at least, you can manage that. But 3% is simply not enough. Because of this demand, what's going to happen is that rents are going to rise.
So rents, it's the old supply and demand equation. And of course, a lot of the new immigrants and people moving in from interstate, like there's a lot of interstate people now moving to Brisbane and southeast Queensland, they initially rent until they find their feet and decide where they're going to live, don't they, John?
That's right. And when I look back at what's happened in the housing market over the long periods of time after the First World War, after the Second World War, what we saw was huge numbers of people coming to Australia, and of course they had to rent for a number of years before they could afford to buy. So the rent demand shot up and rents shot up, and then eventually these people could buy properties, maybe after 3 or 4 years, and then of course prices went up. Now what we're seeing at the moment is that prices have gone up by about an average of 5% per annum. Rents haven't, and they're lagging by about 2 years. So I can see that rents are going to go up dramatically. If you're an investor, that's great.
Well, that's always happened in the past. The cycles are different. So property values go up, and when people can afford property, when interest rates are low, when there are incentives for young first home buyers, property values go up and rents don't go up as much. But at this stage of the cycle, as you correctly say, when the people are sitting back not buying new properties, partly because of finance, partly because of uncertainty. They rent, and this is the time rents go up. But there's been a bit more of a lag this time around, John, has there?
I think it's the biggest lag we've ever had in our history, and I think that 3% is the lowest rental yield we've had for a long, long time. And it means that because of the demand for properties that's being created by overseas arrivals and people coming to Sydney, Melbourne, Brisbane from interstate, that rent is going to increase dramatically.
Okay, so rents are going to go up, and cash flow is important. Cash flow is king. I mean, we need capital growth to get us out of the rat race. So I know you agree that capital growth is very important as a major factor, but you still need the cash flow to keep you in the game, which is clearly what's happening. So putting all this together, what do you see happening to our property markets moving forwards, John?
Well, I can see that in the big cities, Sydney and Melbourne in particular, rents are going to rise dramatically. I don't think there's any doubt about that over the next few years. When you look at prices, though, in Sydney, where the median price, in fact, I looked at all the suburbs in Sydney, and there's not one suburb in Sydney where a first home buyer, so let's say you get an average loan, first home buyer loan, and you've got 10, 15% deposit, there's not one suburb in the whole of Sydney where a first home buyer can actually afford to buy a house. So that's
You're talking a house as opposed to an apartment?
Yes. There's about 20% of the suburbs where they can afford a unit, but no houses. In Melbourne, it's a bit different. There's about 5% of the suburbs where people can afford to buy a house. But of course, those are out in Melton, Pakenham, Cranbourne, the outer suburbs.
Yeah.
In Brisbane, however, it's about 40%, and then it rises in the other capital cities. So you can see that affordability is something that's in a way causing or stopping house price growth in Sydney, but it's not going to stop the house price growth in the cheaper cities such as Brisbane, and to a minor degree in Melbourne. I think there's still price growth potential there. So it's the population that drives the growth, that drives all this. And as the population increases and people start to buy properties, then rents will convert into price growth.
That's an interesting point you make about the difficulty with affordability. And anyone we were in that position many years ago when we were young, and I've got children and grandchildren, and I understand that as well. So I'm sympathetic of it and understand that. But I also recognise that in the future, affordability is going to be dependent upon your disposable income. And I can see that some of these outer suburbs and these cheaper suburbs and these regional areas, they're not going to necessarily become much more affordable because wages growth isn't much there, while in the inner suburbs there is a disparity. People's wages are going up, people's jobs aren't going to be taken over by artificial intelligence or offshoring or things like that. So that is an ongoing issue in Australia of affordability and what one can expect. But I also know that when I only started in a small apartment, and I remember hearing your story as well about when you started. So a lot of it's also to do with unrealistic expectations in my mind. And I know I'm going to get shot down by some young people, but you can't start off in the sort of house that took your parents 30, 40 years to buy.
That's exactly right, Michael. And our first property was a rundown house in Hawthorne. It was, when Hawthorne was not fashionable suburb.
It wasn't fashionable in those days at all, was it?
No, it wasn't. Or parts of it weren't. And, my parents were shocked when they saw the property, and I said that this is what I can afford. And, now that same house is worth 1.5 million. So you can see how things have changed.
Now, looking back over the long term, because I know your statistics go back over the long term, I noticed that you've also realised a change in the difference in prices between regional Australia and capital cities. I remember a graph you did many years ago that impressed me where way back at Federation, the cost of a big house in our big towns in the regional Australia, because we were living off the sheep's back and because it came off after the gold rush, etc., they were almost at parity with properties in the big smoke. But over time, that's changed, John.
That's right. In fact, there have been times when a country house would cost more than the equivalent house in a capital city. And one of those times was during the Great Depression, when people simply left cities because they couldn't afford properties. But in general, what's happened is that the equivalent price has dropped. So the price of a country house compared to a city house has dropped, and whereas it was about equal in Federation, now it's about 55%. Now that doesn't mean that country prices have fallen. It just means that city prices have risen more, and in particular those in Sydney and Melbourne. And the reason for that is that we've had huge overseas migration since the Second World War, and most of these people want to live in the capital cities. They don't want to live in the country. And, I've spoken to people, a lot of it's Chinese or Indian people who are looking at property investing. And I say, why don't you consider country? And they say, oh, no, I don't want to drive out of the city. I feel comfortable. I'm used to living in a big city. And so they just simply don't want to invest in a regional or country area. So that increases the demand as more and more people just want to live in our big cities. And that's why that disparity.
This is likely the trend moving forward, of course, and that's what I guess partly what I was getting at, that if we move forward and look forward a decade or two, our big capital cities, in particular Melbourne and Sydney, have decoupled from the rest of Australia. Brisbane's doing very well and very strongly as well. And while there is growth in regional areas and there are industries there, the major economic growth, population growth, wages growth is likely to remain in the big capital cities.
That's right. And I think the other dynamic that we see occurring is that because a lot of these people come from big cities, from overseas, that they want to live not just in the big cities, but they also prefer units to houses. So that means that unit demand is actually rising more than house demand. And it's not just affordability. It's because units are becoming more and more attractive, better facilities and features. So if you can find a really good, well-presented unit, it's likely to go up in price, if not more than a house, certainly as much.
I think that's a really good point, because most apartments, units, are built for investors, investment stock as opposed to investment grade, and they're not very good. They're built out of paper mache almost, if you look at the Opal Tower. But on the other hand, a good apartment, a good unit, one that is aimed at owner-occupiers, that's going to be in strong demand in the future. And I agree with you. I think more and more of us are wanting to live that way. If you look back if a visitor came to Australia, hadn't been here for a decade, they'd be amazed at how our cities look very different to then. So it'll be really interesting to look forward in 10 years' time, and when people will look back at 2019 and say, gee, I wish I bought another property then when everyone was saying it's a bad time. John, thank you so much. And if people want to find out more about your research and get your reports or your regular blogs, they go to lindemanreports.com.au. Thank you so much for your time, John.
Thank you very much, Michael. It's been a pleasure.
I always enjoy my chats with John Lindeman, and I apologise that the sound quality wasn't as good as I'd like, but I hope the content made up for it. In a moment, I'm going to share with you in my Mindset Moment how to be a winner, and then we'll have a chat with top selling agent Adam Nobel from Brisbane about how to choose a selling agent. But if you've been listening to my podcast for a while, I hope you now realise that attaining wealth doesn't just happen. It's the result of a well-executed plan. And you'd also by now realise that most property investors fail. They sell up, they don't keep their properties, and those who do keep their properties, 90% never get past their first or second property. And that's why each week I try and share with you elements of the strategic approach that I use and that my team at Metropole use when they build a strategic property plan for our clients. Look, simply it means you're more likely to achieve the financial freedom you desire. Now, you're probably aware that the team at Metropole help our clients grow, protect and pass on their wealth because they use our buyer's agency services, our property management services. We have property renovations and development management and wealth advisory with Ken Race. But you may not know that for most of the clients, the journey starts with us building a detailed, personalised strategic property plan for them. So whether you're a beginner or you're looking to just get a second opinion on your current position, how your portfolio is going. And if you're a beginner wanting to start correctly with a time-tested, proven investment strategy, why not allow the team at Metropole to build a strategic property plan for you? It's going to give you clarity. It's going to show you what's possible. It's actually going to show you what's realistic. Now think about it. Wouldn't it be worthwhile if we were able to show you what types of property you need and how much cash flow you need to achieve the goals that you set out? Wouldn't it be worthwhile if we explained to you the next steps and your timeline, help you get in the right direction? So why not go to metropole.com.au, leave us your details and allow my award-winning team to help give you some clarity in these uncertain times. Metropole.com.au. By the way, we've got no properties for sale, so what we do is discuss your individual needs and our unbiased property strategist will help you formulate a plan or review your existing portfolio.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
Over the years, I've had the privilege of working with some very successful business people, property investors and entrepreneurs. And I've also met some, I guess, not so successful people. And I've found that in general, people fall into one of two groups. Those who make excuses and those who don't. Now, the ones who make excuses, they don't start that way. I mean, no one's born talented at making excuses, but over the years, they learn to get out of things. They learn how to blame the economy, their parents, the teachers, the system, pretty much anything they can deflect the blame on. These give them the excuses they need. And of course, there's the other group of people, those who don't make excuses, or rather won't. Now, we all have our difficulties, and some days we feel like making excuses. But winners stop themselves. They don't make excuses. They just get the job done. Interestingly, we all have similar capabilities. Yes, we've got similar capabilities to get things done or not, and to make excuses about it. And when you wake up in the morning, you get to choose which route you take. Now, I recently read an insightful quote that said the difference between successful people and unsuccessful people is that smart people hate doing the same thing that unsuccessful people hate doing. But successful people do it anyway. So as you go on this journey we call life, you're going to get a chance to back out and make excuses or not. You have the choice. You decide. If you're planning to sell your home, Do you really know how much that transaction could cost you? Now, it's a significant amount. Now, you're probably thinking I'm talking about the agent's commission, and sure, that can add up, but you'd be surprised how much more the right agent can get for your home, or put the other way, how much the wrong selling agent could cost you. And since this could easily be tens of thousands of dollars, and you'd certainly shop around if you were spending that sort of figure elsewhere, let's have a look at how you can choose the best selling agent for your home, because I've found that many vendors just choose the first agent that they meet. That's why I'm having a chat today with Adam Nobel. Adam's the principal of Brisbane-based real estate firm Hugo Alexander Property Group. Now, what makes Adam really unique is that he's sold 320 of the 323 properties that he's listed for sale, and he's negotiated more than $35 million above his client's asking price, above their reserve price at auction too. Now, I got to know Adam really well because he joined us at Wealth Retreat and last year, and I've seen the integrity that this man's got. And I'm impressed that over the last 11 years, he's ranked amongst the top 1% of agents across Australia. So why not ask the expert how you choose a selling agent? Good morning, Adam.
Good morning, Michael. Thank you for the introduction.
Well, in today's property market, which is a little bit flatter and prices aren't booming, why is choosing the right agent to sell your home so important?
Well, the way I see it is it's an investment decision, and it's a very important investment decision. And if you are buying a home, you'll spend a lot of time doing your research, the same if you're buying stocks. But for some reason, when people are looking to sell, they will take a recommendation of a friend. They might even buy off the person, they might sell with the person they bought off, despite them being not a local agent or perhaps the best person in the area. I think a lot of people are looking at the wrong things when it comes to picking an agent. They're not really sure of what criteria they should be looking at. They're not really mystery shopping the agent. And you're right, Michael, the right agent or the most suitable agent for the property and the most skilled agent can get tens, even hundreds of thousands of dollars more come sale time.
Well, you said that one of the things they do is they get advice from friends, neighbours, or they know somebody who's in the real estate industry. Look, we all know somebody who's in the real estate industry. I think another mistake I've seen people make is choose the highest profile agent, because while they may be doing more sales in your location, they may not be the right person for your particular property, Adam.
Yeah, that's exactly right. And often the way people research when they're looking for an agent is they'll basically do a digital sign count. So in the old days, they used to maybe get in the car and drive around and see who had all the listings, or they might attend auctions and see who's selling. These days, they'll hop onto realestate.com, a domain, and they'll pick the agent. A lot of people will pick the maybe one or two agents or three agents that have the most listings online. So these are the highest profile agents usually. And I think it's not really about listings, and it really needs to be, the assessment needs to be the listing to sale success rate. So most people will go and interview the agents with the most listings. Others will say, well, let's have a look at how many have sold by these particular agents. But really we need to be looking at the listing to sale success rate. And the only way you can really measure that is by actually running a spreadsheet. And I'm happy to discuss how that works if you wanted to mystery shop online the agents in the area and really understand who is the most successful agent and who is it that's just running a volume business where they're just getting lots and lots of listings but not necessarily selling them.
That's an interesting point. What else would you do as part of the research? I know there's lots of questions to ask the agent, and we'll get to that, but we're still preliminarily doing some research to see which agents we're going to sit with because there are so many options.
What I recommend is starting an Excel spreadsheet. So the first thing that you'll need to do is hop onto realestate.com and register for buyer alerts. So, for example, if you own a house in West End, just go to the search page, enter houses in West End, all prices, then save your search, leaving your email address. You'll then be emailed every time a new property that fits your search criteria hits the market. Then what I do is I'd start an Excel spreadsheet. In column 1, have the agent's name. Column 2, the property address. Column 3, the date the property was listed. Column 4, the start price. And in column 5, sale price. And then in column 6, the sale date. So by doing this, you're actually measuring the days on market, if there's been any price reductions, or even if the property sold for more than the original start price, you'll be able to see the agent's listing to sales success rate. You'll be able to see who actually has the market share in the area, and you'll start to get a feel for whether the agent has a volume business, so where they're running with heaps and heaps of listings but not necessarily selling them, or whether they're running a tighter business where they're perhaps going to have more time for you and have a higher success rate as well.
Now, Adam, that sounds like a whole lot of work. Can't I just go to one of those online sites and they rate the agent, they tell you the best local agent, the agent finders? I don't want to mention particular names, but they're going to get me the best agent in the area and it won't cost me anything.
Well, so it will take maybe 5 to 10 minutes a day if you were to keep the spreadsheet. And you will get the real data there in terms of what's happening. There are a number of websites online, yes, where some say that they'll offer you a free valuation. I would offer a word of warning to the listeners out there that only a licensed valuer can offer a valuation, so be careful with that one. There are a number of these websites as well that are agent introducers that they say, yeah, we've vetted these agents, we've interviewed them, we've found the best agent for your area. In fact, my experience has been that that's really not always the case. Some of the websites, from my experience, virtually none of them actually interview agents and vet to see who's the best and most suitable for the area. What they do, however, is they will put out some of them will put out a bidding competition essentially. So whichever agent will pay the highest amount in commission, should they sell the home, these are the agents that are put forward as the best agent to sell a particular person's home. So I'd be very wary of those sites, Michael.
Now, just to make it clear, the person who gets paid with this commission is the site. And I know that because we're also licensed estate agents, even though we don't sell property. We have a very large property management department and we're Australia's largest buyers agency. So we're listed on some of these sites and nobody's ever bothered interviewing us, Adam. So I know exactly what you're saying. So be wary of online valuations, which are just a way of sucking you in to get an agent to speak to you, and be wary of portals that promise you they're going to get you the best agent. Now, there's no doubt that some really good agents are listed on those portals, and there's no doubt that there's a lot of very, very good professionals out there. I guess the topic we're discussing today, Adam, is to work out who's the best agent in your location, because even though somebody could be a very good agent in their patch, they've actually got to be a local area expert, don't they?
Yes, I do believe that. So in the area that I've sold all over Brisbane. I've sold in probably 40 suburbs, and we've had over 20 highest price sales records for those suburbs, for each of those suburbs. So I do believe that there's an element of process that I believe the best agents Australia-wide, they have a very strict process that they follow, and they're constantly evolving that process. And a really great process will get a premium price, I believe, in any marketplace. However, the sort of hypersensitive local market knowledge, if you like, really does add that extra. And I have seen excellent agents with excellent processes not succeed in my trade area because they didn't have that inside information. So probably the highest profile agent in Queensland tried to sell in a street that I've sold 6 of the last 7 houses. He wasn't successful. He had his highest bid at auction was 1.1 million. I was then appointed. I sold the house for 1.45 within 3 weeks. And it's only because I know the ins and outs of every single home, the per square metre prices, the absolute differences in every property, even which part of the street's going to have a higher value. So you're spot on.
Now, one last question. What about the concept of mystery shopping agents? I know you've spoken about that before.
Yeah, so look, not everyone's going to want to sit there with an Excel spreadsheet, so I acknowledge that. I think another terrific way you can mystery shop is really by going along to open homes and pretending that you're a buyer, by emailing the agent, asking questions, by ringing them up as well, and by asking them some tough questions. I think taking the agent for a test drive is one of the best things that you can possibly do to get a feel for what your experience would be like as a buyer, what your buyers would experience should you list with them. But also you can see how the property's presented. There's a whole number of things you can get a feel for as to what the experience will be like. And I think some of the good questions to ask, really, or the things that you should look at when you're going along to the open home, is to really see how well the property is presented. Did the agent promote other properties to you? How did they handle any objections? It's good to keep a scorecard as well of maybe the number of contacts after initial open home or leading up to an auction. How many contacts did the agent give you? Did they call a lot? If you're leaving messages for them, how soon before they called you back? Were they speaking to you with urgency? Did the property look better when you were there, or did it look better in the photos? I think it's really important that you go and do these things.
Fantastic. So in today's chat, we had to talk about how to choose the right agent, how to shop around to get the right agent. But we haven't even spoken about what question to ask when you sit down with them. So are you able to come back next week, Adam, and we can have a bit of a chat about that?
Yeah, would love to. Thanks, Michael.
Well, we covered a lot today, didn't we? And if you got some benefit from it, why not let other people know? That's what I'm trying to do. I'm helping you and others get as much benefit from my knowledge and the experience of our experts. Why don't you tell somebody through Facebook, Twitter, or LinkedIn? Just pass the message on somehow or other. And it'd be great if you left a review on iTunes, Stitcher, or whichever platform you listen to this in. Because not only does it help me feel better, thank you very much for all those great reviews I get every week, but it also tells other people about it and gets the message out, because my aim is to educate as many investors and stop them making mistakes. And every week I tend to read out a couple of reviews, and when I do, if yours is read out and you email me at michael@metropole.com.au, I will gift you a copy of one of my books. You can choose which. And a couple I'd like to read today is one that came from Chris, who said, "Hey, Michael, I've been listening to the podcast for some time now, and as a younger investor saving for my first deposit, I feel as though I'll be able to avoid a number of initial mistakes thanks to your insights. My car's become a mobile university, and you're the professor. Keep up the great work and looking forward to the future." Well, thank you very much, Chris, and I look forward to hearing about your successes. And another one said, "Inspiring and insightful. Your podcast has provided me with a broad understanding of property investments and, most importantly, highlighted the lifelong importance of never stopping learning. Thank you and keep up the great work, Michael Maloney." Thank you, Michael, and I look forward to gifting you one of my books to help you along your journey. And keep those great reviews coming in, and I look forward to being with you again in a week's time.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from today's show, we'd really appreciate it if you would leave a review, and we'll read it out on a future show, and Michael will gift you one of his books as a way of saying thank you. Just go to michaelyardneypodcast.com/review and let us know what you think. If you don't already subscribe, head over to iTunes or your favourite Android app. You'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 30 minutes.